following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour from me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As always, we'd like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
Most every day. And of course, what's going on today? Well, I had and it happens during temperature changes. I had the worst pounding headache yesterday. It's almost always, I suspect, related to some kind of allergy, but I'm not exactly sure. Always feels like my head's been knocked off, and always got this throbbing thing right at the base of my skull. I can still trade, but not kind of disagreeable, so I decided to not go on the air and vent my spleen. And of course, today it's even worse. Not the headache, the stuff I want to vent my spleen over. I'm sitting here reading all these leaked emails, and I'm thinking somewhere Nixon is rolling in his grave going, look what they get away with today. They get away with everything. And the press is more than a willing accomplice to paper over anything. And in fact, what do we have? Debate moderators advising the campaign of one of the people. It'd be horrible either way, right? I think everybody would agree with it. Anyway, we'll talk a little bit about some of the stuff, but I don't know if you can be a human and ignore the stuff that we see today. But I think you got to try, I guess, right? I'll just indulge myself a tiny bit. In the S&P cash, we're off 30 points. Volume is just 2 billion shares, so not all that exciting, but we've got to look at just 2.8 billion shares. Lightest day, full trading day of the year that wasn't a FOMC meeting or we were waiting for a jobs number on just a regular day. Certainly looked like it. And then, of course, we had some rather difficult news after the bell. But volume is significantly higher than yesterday. I would like to see about 2.5 billion shares as we come in today. But I suspect that we're in for, and as I've said for the last week or 10 days, the risk reward in that 2160 area of the S&P cash just didn't get any better. There just wasn't any better risk reward for the last 2 weeks, but to start picking off positions in the index, and we did. In fact, many of them, if I would have tried to pull the trigger on some trades last night, I just wouldn't have been able to do them. The risk reward would have been poor. Accumulating those positions, watching and knowing that the market was going to break fairly soon, I was able to start putting things on, even into last Friday's close for longer term and some other stuff. Anyway, we're off 30 points at 2134. A break of 2140 on the S&P cash implies a test of the 2090, 2087 level on the S&P. So we've got another 50 points down. And of course, if you've got options, you had a long time this month. We go to the 21st before they expire. Probably the difference today, if there is any difference at all, is that the Fed and the Treasury working hard just really can't seem to stem the tide of everything going against them. And of course, my bellwether has been the TLT. We'll talk more about that and a few other things. Before we do that, though, it is time to get into some history.
Then it's all just a little little bit of history repeating.
And what's going on out here in history? Today in 1817, the New York Stock Exchange formally bans negotiated fees, compelling all its members to charge fixed income and commission rates to the investing public, including members of the stockbroker's own family. Commissions will remain non-negotiable for the next 158 years. Several brokers were thrown out for giving kickbacks, especially from probably the 50s into the 80s. And, of course, what's his name? He's got the big brokerage, or did have the big brokerage. I'm trying to remember the guy's name now. Someone maybe will something. Maybe somebody will bring it up. It was 1982 or 85. Schwab. That's what I'm thinking. Charles Schwab opened up the first brokerage by compelling lower prices and significantly lower prices, charging $20 where most brokers charged $100, and all they left you was a broker. On this day in 1817, they fixed prices for a market with unfixed prices. Doesn't that just sound bizarre on its face? But we shall see. Anyway, Jesse Livermore, I brought this up last week, but I want to bring it up again. And that is why building a bigger position and the way I trade, different than other people. Other people not particularly wrong. Some of them are. But the way I trade comes to a couple of things. And it took me a while and a long time to get familiar and comfortable with trading that way. Part of the problem is everybody, including me, has put a one-size-fits-all, depending on your temperament and your personality and what you can allow to risk. But now, I don't really go to bed feeling anxious anymore. Don't really worry about it. It's I think early on, I started full-time trading in 1998 and bumped on TFNN in 1999, I think. But one of the things I thought was very interesting is Tom said, you got to go through a few of these cycles before you really figure out. Now I've gone through a ton of them and understand just how bullish and euphoric people get at highs. And almost nobody can actually pull the trigger at a high. But Jesse Livermore said this, and there's another thing to remember, and that is a market does not culminate in one grand blaze of glory, neither does it end with a sudden reversal of form. I learned a lot of things at TFNN before I became a host and a better trader. I learned a lot from Tim Ord, who gave me an idea how to trade at much larger time frames than most people. In fact, I don't think anybody around TFNN in the early 2000s was thinking very long term, except in the level of gold. But that's part of it. We'll take the other side of this after the break. Got a lot of stuff to talk about today. Give me a call, 877-927-6648. Email me at path@tfnn.com. Post messages in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I had a good question in the den, and that is about the character of turning points in the marketplace, medium term and long term. And I guess the best way to describe the question is the character at highs and lows. Lows tend to be very short and easier to buy in the broad markets, let me put it that way. At highs, they tend to do exactly what we've seen here. As Tom says, the market likes to take the most amount of money in the least amount of time. And, you know, incredibly light volume as we saw yesterday. I think 2.8 billion shares, which was virtually nothing. The last volume since September 1st. It was only, maybe 50 or 100 million higher yesterday. It was low volume. Part of that was the bond market being gone. Did I lose everything? I think I lost everything here. Let's see if we can't turn this back on again. Here we go. But anyway, yeah, it's when I talk about this particular statement from Jesse Livermore, it's a lot of eyes. They tend to hang. If you think of a basketball player with hang time, that's exactly what they tend to do. They don't tend to just go up, you have one day and that's it. Now stocks, individual stocks will. But everybody keeps playing whack-a-mole, trying to find anything that will go higher until it comes back. One of the other things, and like I said, I'm probably a little different than many of the hosts on here. I really am more a medium-term swing trader. But there was another thing that really hit home when I was reading the book, reminiscence of a stock operator. But he was talking about something. He said he really meant he was talking about a guy that was really a great trader in one of the brokerages he went to. He said he really meant to tell him the big money was not in the individual fluctuations, but in the main movements. That is, not reading the tape, but sizing up the entire market and its trend. And kind of what we do here on the show every day. I'm looking at highs. I'm looking at lows with light volume. And that's to look at the main movement, not the next 5 or 10 points in the marketplace. As I tend to think myself, and I said probably derogatorily, but I probably shouldn't have done that. But I don't work for hourly wages. And the more I trade, the more I feel like I'm working for some kind of hourly wage. Waiting for big turns in the market, kind of what I do. Now, one of the things that had happened, and one of the trades that we had on, benefited from alumina, basically down 20%. Let's get a current quote on that one right now. This is off 26, let's call it 26%, 137.13. This thing had gapped down before, but it goes back to one of the reasons why I kind of missed this one on the way up. There was no real good buy point or good technical signal to buy it, although I loved the company. But this is another thing that you really need to know, why you need to know something about the companies that you're involved in. If it's a biotech, can a drug come on and off, but you're probably not going to have a good read on it. Big manufacturing companies like Illumina, they build these huge machines. In fact, their top-selling machine is $1.5 million a piece to sequence DNA. They've got machines all the way up to, I think, to $10 million. But this thing tanked after hours. The reason why is it's very tough when you're selling very expensive stuff to find out where the bottom of the market is. If you're selling 5 or 10 things a month and you just sell 8, and then you sell 5, then you sell 11. It's kind of all over the place, and it's very tough to have a trend. If you're selling, 10 million or something, and then you sell, you'll probably sell something like 9.8 million the next month, and then 10.4 the next month. You're going to have a lot better idea because you have a much bigger sample size. But one of the reasons I dislike companies like Illumina, especially after they've gotten to some pretty lofty highs, is something one of my bosses once told me. His name was Keith. He had some very pithy sayings. The first one I always loved was when I was on him to try to get something out of engineering. He'd always say, 9 women can't have a baby in 1 month. And when we were trying to hire people and he wouldn't hire anybody, he'd always say, you don't hire 7 people for a high jump to jump over a 7-foot bar. You hire 1 7-foot jumper. And always good. We got good people. I never had to complain about it. But he came from the very olden days of Scientific Atlanta, where our company was kind of born as a small bastard child. And he said one thing he hated every single day was knowing that Scientific Atlanta was always feast or famine. Depending on what Comcast or the cable station of the day was going to do, who was going to cheat them, who was going to go out of business. He hated knowing that he was either going to get an order for 100 or 150 of these $5,000 boxes that they sold, or he was going to get no orders or 5 orders. And he says, always feast or famine. So he said, Dave, when you're designing or coming up with a new idea for a product, I want these things to sell 1,000 or 2,000 of them a month. If we build 500, man, no big deal. 1,500 and then sell 0 the next month. But certainly happened a lot with the stuff they did. But that's the problem with Illumina. They're selling these big, expensive things. Eventually, all the people that can afford big, expensive things get filled up. And that it kind of goes sideways into my thesis on Tesla. I don't know when it's going to happen, but my guess is, and my speculation is, I haven't seen anything that would have me short Tesla, is that you're going to see the same kind of almost out of the blue change in the amount of sales for Tesla. They're going to hit all the people they can. And the market's probably going to start at the grassroots level and whack them. But always be wary of companies that only sell a handful of things a month, because it's always feast or famine. And then eventually you will see a 6-month or a 9-month or a year or 18-month cycle where they can't sell a thing. Everybody goes into the mode of hoarding cash in business, and these things can take an absolute beating. A great business, unfortunately, it is always feast or famine when you're selling things from $1.5 million to $10 million. Especially after you fill the initial demand, it becomes much harder to figure out what the run rate is. And that's what the problem with Illumina is, and why it's off almost 26% today. When we get back, we'll talk more about a few things, and then we'll get into some charts as we go to the bottom of the hour. 2130 on the S&P, cash off 33 points.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
If you missed the basic WikiLeaks drop for today, a couple of paragraphs right out of the book 1984 about working and creating people that are unaware and compliant in the citizenry. And of course, the emails talk that we've got to get back to making these people compliant and just doing whatever we tell them to do. Unawareness remains strong, but compliance is obviously getting rapid. This problem demands some serious thinking and not just poll-driven, demographically inspired messaging. But there's everything else in there from the deleting of the emails that show a mistake. It was purposeful. But newspapers are trying to avoid a great deal of this today. They've got their theme and they are moving forward. But check it out. I think it would scare you to death. And as I said before, Nixon is just rolling in his grave going, man, what could I gotten away with today? No one cares. It is a mad market, and we will get to it. What else is going on out here? I'll get my charts up. Where are they? What we got going on here? We'll look at a few of them. I was looking at some last night. I wanted to see how some of these actually reacted because they were fairly interesting. We will continue on here. Let me see. Come on. There we go. Centerpoint Energy was one of these stocks I was very interested in. Had very light volume. Last summer we saw, and what was in August, a lot of these, even though they had lighter volume, and this continued to run lower. In this one, I wouldn't have gone along. The energy from this bounce from August 17th to September 27th saw more energy on the way down. That means at best you can hope for a consolidation before the energy stocks rise significantly higher. This one is dipping down with the market. Does not have, more than the 12 million shares of August 17th. But again, very interesting. Some of these other ones that we've been thinking about the last week have been down on some of these lows. And we've looked at those. CVS Caremark is this 86.50 low, February 9th, 11 million shares. Got and dipped into it just a little bit with 8 million shares today. So you want to see how CVS volume comes in today. Close below 86.50 would be rather significant. On this last leg down has been significant too, as most stocks have been. There's a handful of them. They were the semiconductors that all rolled over today. Deere and Company, yesterday this one made a big signal. Had 23 million shares for the spike of August 23rd. So this thing came in with some earnings and ran a lot of shorts. This time, not so much. As we've said the last few days, maybe the last month, a lot of these stocks are coming into these double gaps. And this is another great example of the theme that is going on right now. It's not a theme I've seen in the past significantly, but is certainly one here. And that is that these stocks are going pretty much to the part where the first gap meets the second gap at almost the same price. I'm going to almost call these gap confluences, like Fibonacci confluences, maybe the best way to describe them. When we go back here and look where these gaps occurred, the first one in Deere and Company happened on the 22nd of May 2015. That was the gap up. You get a high volume gap down on August 21st, 2015, and that's where you came and we're coming right back into. But of course, that volume down day was 15.2 million shares. We got into that yesterday with 5 million shares. It got right up to that confluence level of both gaps, rolled back over, and that was pretty much all she's written. Pulling back today, not a lot of volume so far. Again, if this thing got down to $78, the market turned bullish out here, this might be interesting, but it does look right now like you have a fairly decent level of a top in John Deere. Other stocks of interest are Dover Corporation. This one was making a nice little triple high. You even had higher volume, but could not get into the high. So this wouldn't be one that I actually took. But certainly this thing blew through the previous low of September 14th that had 2 million shares at $68.10 with almost 5 million shares yesterday. So you had 2.5 million times the volume. But this is the way that tops work. Literally everything is given back in a day or two. People that do not move fast lose it all. And if anybody's been around the market fairly long, they'll always see these studies that say you would have made 400 times more money if you would have missed 10 of the worst trading days in the stock market. And this even shows you that bullish charts can give it up in a real hurry. What else do we have going on here? Okay, just checking in here. Just a couple of points off the S&P cash. Volume still hasn't picked back up. As I've said before, when you get these moves off the highs, it tends to take a couple of 2 or 3 days for people to actually spook and really start moving the volume out. So I'll give 3 more days out here to start seeing the volume really start to accelerate. Do not expect it all to accelerate off the first day. A lot of people still in decent positions. The ones that are nervous are, of course, anybody that's bought in this range in the last few months. Helmerich and Payne, HP, not Hewlett Packard, just the symbol. You'd think that they'd give HP the symbol, don't you? I wouldn't want to. Everybody says HP. I'd want to have something else like HNP or anything else as a symbol. So you don't. Maybe they like getting confused with HP. Hard to tell. Anyway, July 14th, $70.28, 2.1 million shares. You had some very decent juice off this high. What you didn't have is any kind of volume yesterday as it pierced that $70.28 high. It's pulled back down. But, you know, decent energy on the way up. This is one that you would want to look for in a pullback on light volume. Not a short candidate at all, but some of these are all telling you that many of these things are kind of rolling over. Laredo Petroleum, LPI, was watching this one peak above the May 5th high that had 9.7 million shares at $13.73. Got back into it a few days ago. Kind of a theme I'm seeing in energy. The October 6th high, $13.93, 4.6 million shares, is the best it could come in there. So basically, you're testing highs with 50% of the volume. Energy was about the same on the way up as on the way down. What you didn't have is just these last few days that looked really poor. We're going to break. And when we come back, we'll look at Nordic American tankers with a warning that we've talked about before, but a good example of why you don't touch these stocks for more than a couple of minutes.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. I've brought this up a few times, but I did want to watch this one again today because it is breaking through the lows, even with lighter volume today. Looks like it's going to continue lower. I think I brought it up a couple weeks ago with someone about reverse splits. You really need to know whether you're trading a stock has a reverse split in it. There probably isn't a bigger indicator that a stock is going to fail over time than a reverse split in the market. This one certainly had it, but it also had a very juicy tail at the top, 3 million shares, and it came back, tested it just a dime underneath it with 1.8 million shares, so almost half when we look at the June 9th high compared to the May 9th high. Energy was stronger off that June 9th high back down to this $10 low on August 26th. You bounce with almost no energy, and you come back down here for these lows. These stocks that bleed money are typically a good signal of it. And anytime you see a reverse split, you want to take a look at it. But it's like 90%. So if you are thinking about going long some stock, make sure that you know if it's got a reverse split in it. I brought this up, I think, back in mid-summer because of Alcoa. Alcoa was another stock that some people thought that if we could just give it a reverse split, it would fix everything. The downside is that, of course, this is yet another problem. Down on huge volume today. Another earnings disaster. I suspect we are in for a season of hurt on earnings, especially with the dollar going up. Going to have a lot of people guiding down on that. Alcoa's just demand was down. They really kind of pushed this thing up on the split, thinking that they would get a lot of big investors, hedge funds, mutual funds piling into this. Because, of course, we've brought this up many times on the show, that $10 limit where they won't own stocks underneath it. This thing hung out forever at $10. Never could get a bunch of institutional investors on board because they didn't want to have to sell it if the thing tucked back down under $10. So they did a 3-for-1 reverse split on this. But, you know, I don't have any data about stocks that are just bleeding money and stocks like the previous stock and Alcoa. But it's got the stink of reverse splits on it. I don't know if that would be any good. I tell you what, though, if you want to see some mass selling in this thing, if this thing ever hits $10, watch all those funds that got into this thing get back out. You know, this thing has always been mired for years underneath it. And I'm wondering if this is just not an aberrant kind of thing, kind of like airline stocks came out of hibernation for 30 years, did well for a few years, and are now going back to revert to the mean. But my guess is that the business in aluminum has not changed that much. There's a little bit more demand, but it's pretty easy to add that same kind of supply back into it. They really made some bold predictions based on Ford's F-150 selling a lot better than it is now. That was based on thinking that gasoline would be $3.50 or $3.75 a gallon. That is another thing that just never, ever panned out. So they've got a truck that's, $3,000 more expensive than another typical truck with the same features for Ford because it's made out of aluminum. And those things just haven't been selling that great. Other stocks of interest. We were talking about oil early. Caught this, kind of made me think that it was pretty close to a bottom in oil. That's the SCO. Went and tested the June 8th low, $73.91 that had 1.5 million shares. Did so with only 860,000 shares yesterday. Little bounce out of here, and this is, of course, a ultra short, so it's a reverse ETF against crude. Not a lot of juice out here today. Again, I'm not making a play on crude yet. And again, the reason would be looking at my Power Law Vector indicator number, the August 3rd high to the August 19th low, compared to the C to D leg, which was the September 20th high to the October 10th low, had about the same energy. The energy basically backed off about 25% on the way back up to the September 25th high. Even if you hit a low with lighter volume, but the energy on the way down, the best you can hope for is a consolidation level. And that's probably what you're going to look at here with the stock market pulling back, gold indeterminate. A lot of people piled in crude. This is going to be another very crowded trade at higher prices. But eventually, everybody, like the semiconductors, have been a crowded trade. In fact, let's go take a look at that one right now, SMHs. When everybody is long, you got to have somebody out here to buy. And the problem with stocks that just keep going up to the moon and prognostications of never-ending higher prices is that normally you get everybody involved. The SMHs did come off today. They did come off on higher prices. They have basically confirmed a double repo pattern for me today, and that's the most bearish thing you could see. My guess is the SMHs are headed back to the $60 level. Let me check that email out here. Okay, got a couple of things I'll try to get in the last segment. What else is out here? Okay. Okay. So what else do we have? Oh, we got a few more things. TBT. We talked a great deal. About the TLT actually. This is just the reverse. Let's go to the TLT. Pretty much hit this within about 50 cents of an ABC on the way down. We've come down. This is the area where congestion is going to be. My guess, though, is that the energy down was sufficient to maybe get a sideways motion for a little while. We might even get a little bit of bounce out of the TLT. But my guess is that we're going to hop, skip, and jump right through this big gap that still exists. As I've said before, earlier in the show in the last few weeks, so many of these stocks are coming back to that confluence level where one gap ends up touching the other gap. These things are just right at that level of doing that. We've had that the last 2 days in the TLT. So if you see long-term open gaps that are huge, and especially at the same price point, the art of timing the trade chart shows that very vividly. But at the same time, just I don't know, because like I said before, I'm not saying this is a whole thing. This is a theme in the last 30 to 60 to 90 days. It just seems like all these double gaps from top to the bottom, which are kind of like reversal signals, all right? you gap down one day and then you gap right back over it the next day, tend to be not homing pigeons. What would you call it? Compasses, pointing the way right back down to where they've been. But my guess is the energy was more efficient off this 139.15 high, that after we chew through this resistance, we are going to complete that ABC to 128. We'll be back after the short timeout.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, here we go into the home stretch. As we've said yesterday, just 2.8 billion shares on the New York Consolidated Tape. At the end of the day, we've got 2.3 billion shares. So certainly we're going to get more than that. But I continue to think there's a lot of people that just think this is yet another buying opportunity. My guess is that they are wrong. I'm speculating that they are. Probably take a couple of days to come back in. I always remember the move off of the, I think it was the 786 low on the S&P cash. And the discussion about volume by Tim Ward. But he said, you know what, don't be surprised if you don't see volume for a while, both at highs and lows. And I always remembered that one good part of his training, among others. But it's not uncommon at these big changes that it takes 2, 3, 4 days. In fact, on the S&P lows below 786, it was the S&P had already gotten above 1,000 before any volume came in. Everybody, of course, is just expecting to get smacked yet again very hard. What is that, the 2004? Was it 2003 or 4 low? It took, I think you started to see a little volume at 1,000 on the S&P. By the time it got to 1,100, you actually had everybody and their dog climbing on board. So don't be surprised on the highs and the lows of these major turns that maybe it seems like the volume isn't confirming what you have. Normally, it takes just a little bit for everybody to figure out what's going on. So you give it a few days. It doesn't happen instantaneously. Like our statement from Jesse Livermore, market does not roll over in one particular felt swoop, especially at highs. Especially if you want to be a short, it is a little frustrating. You got to sit on your hands a lot. The problem is once you get a move like this, how do you short it? What's happened the last 20 times? If you can't hold a position now, it becomes incredibly difficult to ever get back in on the move down. And that is one of the hardest things to learn if you are shorting markets. And that is you've got to short it when you can. When you try to short it later on, normally you are with a basket of folks that are the weakest hands. If you've got 30 or 40 S&P points above you, it's going to be pretty hard to shake you. But if you've got a bunch of people, Johnny come lately to the party bunch, in here shorting now at 2130, you're probably going to see some movements and fast movements in these markets, both fast on the way down and fast on the way up. But it does become incredibly hard to hold these things. And why I can't give up a great position, and that I think I have in both my newsletters now, that is I just, the long term is most likely for significantly lower prices. And every day I walk in for the last 2 weeks, I put it in my newsletter, 10 points up, possibility of 40 points down. We got 30 points today, so we'll close. We'll see how today actually ends up. But it continues to be one of those things where you think that nothing has changed, and it has. Well, certainly the volume did change. We probably should have had somewhere around 5 billion shares yesterday to push to new highs. 2.8 some odd showed just what kind of lack of interest there was at highs. And, even from the energy sector, which does not look that bad, you could only get 11 million shares and 17 million shares on the XLE. Always a good time to say, sell when you can, not when you have to. We'll see you here tomorrow. Bright and shiny, same bat time, same bat channel.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.